My name is Bill Kennedy. I'm very glad you're here today. I'm a member of the New York MBA's Education Committee, along with our Education Committee Chairperson, Elizabeth Cheney. I want to highlight one of our most important in-person member events coming up in a couple of weeks, and we'll circle back to this towards the end of today's session. The New York MBA's Advocacy Conference is Monday, March 11th and Tuesday, March 12th here in Albany. Please join myself and members throughout the state as we learn about proposed laws that affect our industry and ultimately our customers. Then we'll meet with our representatives and tell our story of helping to get New Yorkers how they realize the dream of home ownership. Visit our website today and register to attend the advocacy conference. You can make a difference. That's at newyorkmba.org. Before we get started, a few housekeeping notes. Please use the chat function to notify us of any technical issues you may have. During today's webinar, all lines are muted except for our presenters. Throughout the session, you'll have the opportunity to ask questions, and please do so. Please use the chat to ask questions, and we'll do our best to address as many as we can during the Q&A session towards the end. We'll be sharing the presentation slides and relevant resources with you after the webinar. Stay connected with us at New York MBA. We're on LinkedIn. Our website is newyorkmba.org, as I said, and our YouTube channel is where we post the recordings of our webinars. Also, we urge all mortgage professionals to join the Mortgage Action Alliance, or MAA. It's easy, it's free, and it's a way to stay informed of legislative issues that impact the way we do business. At this time, I'm happy to introduce our guest speakers from Earth Visions. We have Craig Hoff, who's earned his Bachelor of Science and his MS degrees in mathematics and computer science from the University of Toledo. Craig is currently the Chief Technology Officer at Earth Visions. In that role, he has been instrumental in the architecture, project management, and development efforts for Earth Visions' World Engine Geospatial Data Management System. We also have the president and co-founder of Earth Visions, Jeff Schott. Gentlemen, I'm glad you're here. We're excited to hear your presentation, and please share your expertise with us.
Well, and this is Jeff Schott speaking. Thanks to New York MBA, we've been a member for going into our third year, and we've very much enjoyed working with the team at New York MBA to put this presentation together. Earth Visions is a software company with a history working with the U.S. Air Force and other large entities on issues of climate and environmental impacts from climate change. As you can see, the quote from FEMA, "When disaster strikes, information will always be the number one most valuable commodity." Earth Visions is in the business of providing information on historical trends for severe weather and disaster events, real-time information when something is approaching, and then helping our customers assess what has happened when a severe weather event or other kind of disaster, man-made or natural, has swept through an area, and helping our clients assess damage. And so we're both in the pre, during, and post-event business. What we're going to present today is a review of some of the events that happened in 2023, which was kind of an unusual year. We're going to look ahead to 2024. We're going to zoom into New York and the challenges faced by New York businesses, especially in banking and real estate, from severe climate events. And then we're going to look at solutions that are offered both from Earth Visions and in the broad industries of mapping and alerting and trend software. So with that said, thank you all for joining us today. And we'll begin to look at kind of the review of 2023. It was an interesting year. There were 28 severe weather events that caused more than $1 billion in damage. And you can get a look at sort of where they were concentrated, a lot in the middle of the country in the south. It was kind of a light year for severe hurricanes. But what we've noticed is a lot of damage is being caused by sort of the not so spectacular weather events that are on the news all the time. But if you look at the breakdown of the 28 events that had more than $1 billion in damage, one was from winter storm and cold wave impacting the Northeast. There was, of course, the Lahaina tragedy, the firestorm that ravaged Lahaina. Drought and heat spanning the central and south U.S. was one instance. 14 instances of flooding occurring in California, 2 outbreaks of tornadoes in the central and eastern U.S., and 2 tropical cyclones. But 17 of the billion-dollar damage events were mainly from severe rain, hail, and lightning. Those were billion-dollar events, and there were 17 of them. So that to us was very significant. And basically looking again at how climate has changed. Unfortunately, we are seeing an increasing number of large disaster events, with the annual number increasing steadily from only a handful in the 1980s to 28 that we just covered last year. Note that a large part of the change is being driven by an increase in the number of severe thunderstorms, which produce damage through tornadoes, hail, and high winds, and flash flooding. As the earth warms, the air can hold more moisture, roughly 7% more for 1 degree Celsius of warming. This boosts the chance of thunderstorms, leading to more violent storms, more lightning strikes, and more intense downpours, which have triggered a lot of localized flash flooding, as you may recall, in New York and Vermont last year. 2023 was also notable as the hottest year on record, with a global average temperature about 1.2 degrees Celsius above the 20th century average. That's gotten a lot of media coverage. The summer of 2023 was particularly hot, with an average temperature over 4 degrees Celsius, higher than the norm. This was true not just of atmospheric temperatures, but oceans as well. This also got a lot of media coverage. The presence of a strong El Nino system, plus warming, induced temperatures up to 3 degrees Celsius over normal temperatures, breaking many records. For instance, in July, water temperatures off southwest Florida and the Keys reached 95 to 97 degrees Fahrenheit, and there was a lot of humor around that. You don't need to buy a hot tub in Florida, but that caused some real problems. Coastal ecosystems. We're tracking all these rising temperatures all over the world and all over the country. Now, moving into what we're looking at for 2024, as of February 2024, NOAA's Climate Prediction Center expects the current El Nino weather pattern to end in the late spring, so that's only a couple of months, and a La Nina pattern to develop by mid to late summer. What will this mean for this coming year's weather? Well, at present, we are in the midst of a subsiding El Nino climate pattern, which is expected to linger until late spring. The warmer waters associated with El Nino caused the Pacific jet stream to move south of its neutral position. With this shift, areas in the northern U.S. and Canada are typically drier and warmer than usual, but in the U.S. Gulf Coast and Southeast, these periods are wetter than usual, have strong chances of increased flooding. By summer, it's anticipated that the La Nina pattern will have developed. La Nina events are typically associated with drier weather in the south and southwest, which may increase the risk of drought and wildfire in the southwest by fall. Conversely, there is increased risk of heavy rains and flooding in the Pacific Northwest and Canada. La Nina can also, and has in the past, lead to a more severe hurricane season. We saw this most recently in 2020 through 2023, where we had a lot of named hurricanes and some extreme cat events. What does all this mean for New York State specifically? As with the country as a whole, the number of billion-dollar disasters is increasing over time in New York, with a record number in 2023, although it wasn't a record number of damage. There were a record number of events. In 2023, the single biggest disaster was the July flooding event, which is estimated to have caused about $2.2 billion in damage across New York and Vermont. That was the event in July that was in upstate and Montpelier, really severe flooding. And then, of course, the event in September in New York, which was mostly in New York City and in Long Island. We're going to show some data about these events in the next part of the presentation. We're looking at New York disaster risk by county. In 2024, the biggest climate risk is again flood. If a strong La Nina pattern does in fact develop in time for hurricane season, that could bring hurricanes or remnants in the form of flooding back to the New York area. Overall, New York's environmental risk, however, according to FEMA, is relatively low compared to other states. Excuse me, with the highest risk occurring in New York and New York City and Long Island. Higher temperatures in the New York area are being felt most in the winter. Over the last century, average winter temperatures in the northeastern U.S. have increased by approximately 3 degrees Fahrenheit, spring temperatures by 2 degrees Fahrenheit, and summer and fall temperatures by 1.4 degrees Fahrenheit. That means basically we can expect fewer snow events in New York, but more severe ones. So when it does snow, there'll be greater snow totals on the ground. Moving sort of to the overall forecast for the coming year, for the remainders of the year, climate risks include flooding, subsidence, coastal erosion, and severe storms. Economic factors driven by climate change include soaring energy costs and concerns about insurability, an impact on residential properties. As we know, a lot of insurance companies are getting kind of nervous about insuring properties that they are pretty sure are going to flood in Florida and California. So that's a real challenge for the real estate and banking industry. And there's a reputational risk for lenders if borrowers believe they're to blame for financing properties severely impacted by climate change. That creates a certain level of ill will. So, we're really looking at the partnerships between governments, the insurance industry, and the lending industry. How do we meet the challenge of insuring properties that are in areas that have been severely impacted by climate change? Increased NPL ratios. This is a growing field of data and research. A recent World Bank study shows a noticeable increase in NPL ratios following an official emergency declaration. So, non-performing loans go up shortly after an environmental disaster, and then 3 years later go up even more. And this finding has been confirmed across regions and income groups worldwide. We have unusually high temperatures affect loan originations. Studies show that U.S. mortgage loan officers are more sensitive to the risks of climate change during abnormally high local temperatures, and this affects loan approval rates. Specifically, 1 degree Fahrenheit temperature anomaly results in a 6.7% or 1.26 million lower loan amounts originated for a median county per year. So when it's hot, lenders write less loans, especially record-breaking temperatures like in Arizona where it's 120 or 130 degrees. It tends to create higher risk. This is especially true for lenders in counties exposed to risk from sea level rise as well, and for smaller lenders. The impacts of climate change on commercial real estate. We've seen property values in California, Texas, and Florida at risk of declining due to rising sea levels and heat waves, brownouts, water stress, many water issues in the West. The U.S. Federal Reserve has highlighted concerns about systemic risks in the community and regional bank sector due to the extensive commercial real estate debt held by these banks, combined with consistently high interest rates and, of course, still recovering, particularly in the commercial space from the pandemic when a lot of people went to remote working. Despite climate concerns, recent real estate activities suggest that buyers are not deterred. That's good news. Historical data shows little precedent for climate risk affecting commercial real estate value. Obviously, there are some communities much more vulnerable than others. Houston, Miami, Norfolk, Virginia are regularly cited as places where there is real concern about rising sea levels. And those areas are beginning to exhibit some softness in the commercial real estate market as they factor in the risks associated with sea level rise. In terms of the legal regulations, New York is one of 4 states that have enacted stricter flood risk disclosure requirements in home sales. The new law closed loopholes and mandates additional information about flooding in properties, including whether they are in flood hazard areas and if any flood insurance claims have been filed. This reflects the increase in extreme rainfall and 17 heavy rain events and includes the amount of sea level rise in the Northeast relative to the rest of the country. Some of the solutions we are working on is certainly, as the director of FEMA said, the more you know, the better off you are. Collecting predictive data is a huge trend in the research and climate research world. But you guys need data on individual properties, not broad areas or counties, and those inform lending decisions. The most basic thing is a house in a floodplain, is a house in an area where sea levels have been rising. These historical trends can be very useful in identifying risk to portfolios and avoid financing properties in high-risk areas. Community and regional banks, this was an interesting finding, need to integrate climate risk management into their operations due to their exposure, which is similar or greater compared to the large banks. Implementing standard disclosure guidelines, the Task Force on Climate-Related Financial Disclosures can provide a framework for addressing climate risks. Steps include integrating climate risk into risk appetite statements, aligning strategies and risk management policies with the realities of climate change, and adjusting risk models to incorporate climate factors. This is all fairly new. It's almost as if, you know, as the challenge gets greater, the need to address it obviously rises with it. Banks can conduct climate risk assessments and monitor financial risks related to climate change, even without extensive specialized teams, as climate risk data, analytics, and expertise become more affordable and more accessible. So we generally like to pause after the climate piece of this, and then we're going to dig into some of the solutions out there in the world, including Earth Visions that use maps and real-time threat tracking to help you create some of these solutions for your organization. Does anybody have any questions? Or I would also encourage, we've got a lot of experts in these industries on this call. If you have anything to add, it doesn't just have to be a question. If you've got any thoughts on any of what we've presented so far, we'd love to hear them.
I don't see anything in the webinar chat at this point or Q&A.
Okay. Okay. We usually generate more questions after Craig presents sort of some of the ways to track all this information. So we'll go on with the next part of the presentation.
All right. Thanks, Jeff. Yeah. So what I want to do is then carry on from what Jeff was talking about and really look at what Earth Visions does in this area, given the volatility, the changes that we're seeing in our climate and the impacts that's having. Earth Visions has really spent a lot of effort trying to create solutions that will help lenders, folks in real estate and other like industries identify, address, and solve some of these problems and challenges. What we're going to look at in this part of the talk is really how Earth Vision solutions utilize the power of data aggregation, real-time intelligence, and visualization to help our customers understand how events are impacting their portfolio, especially in the areas of weather and disaster tracking and alerting. We're going to look some at portfolio management capabilities we have, and as Jeff was talking about, the importance of really being able to precisely identify risk potential for the properties that you have that you're managing. And then we're also going to look briefly at how we help in the operations space with field team management, fleet communications, and so forth. The Earth Visions has a product suite that includes several different products. We're going to talk mostly about the V-Alert product today and a little bit about Drive Tracker as well. So I mentioned before, data aggregation, real-time intelligence, and visualization is really the core of what we do. We do that, at a global level for all of North America, but then also with information that's really specific to your local areas. So, for example, if you were to log into the V-Alert system, you might see something like this on a typical day. In this case, this was in November of 2023. We track all kinds of threats all the time, whether those be from tropical weather systems or coastal flooding, wildfires, winter weather. We track all of those things. We do that by pulling together information from a wide variety of sources, including tens of thousands of sensor gauges, weather observations, and various weather feeds and models, pull together information on what's happening at a granular level at each location at a time. That, of course, is then mapped to the portfolios that our customers load into our system so that they can look at weather conditions and particularly hazards that are happening at any particular location throughout the U.S. and indeed the world. You can see this, for example, we mentioned before about the September flooding events in New York City, and we'll kind of get back to that in a few minutes, where we can track both, what is the flood risk today per what FEMA has identified as designated floodplains, but also what is coming in the future based on projections of sea level rise, coastal subsidence, and so forth. Where are areas where there's an increased risk of flooding as you're planning out over the 20 or 30-year lifespan of a mortgage? A lot of what we do is really in this area of weather and disaster tracking and alerting. We're going to look at some examples of that, how we provide proactive threat assessment and alerting, some of the challenges that we faced with the Northeast flooding and how Earth Visions reported on those. Hurricane Idalia, which was the biggest hurricane to make landfall in the U.S. mainland this past year. And then also how we help in some other kinds of non-natural disasters, human-caused events like structure fires and power outages. So first, we can proactively provide alerts and information to our customers, to their operations team, to their vendors, to their clients, by sending them emails and text messages, daily reports, and through our API, letting them know when something like, say, Tropical Storm Ophelia is happening, how many properties in their portfolio are affected, and what kind of impact that's going to be. Those alerts can be customized and branded with information so that anyone who gets the alert knows how to call you and get help from you if you're providing that kind of service. And of course, you can click on the Open Map button at any time and get the information about the event. So in this case, this was Tropical Storm Ophelia, which happened in late September of 2023. And what you can see is the information we're providing is about the path that the storm would take and the level of wind speed that would be experienced at each stage and within each of these assets. These icons represent different assets, that power plants and cell towers, but of course they could be any kind of property. And the information provided in the alert gives you everything you need to know about what was happening with that event. That's, of course, also paired with spreadsheet level reports that take each individual property and look at the impact for each property. So what was the wind speed at that property? Of course, these alerts aren't limited to wind speed, also precipitation, whether flooding occurred, et cetera, et cetera. Let's take a look then at some of these events that were particularly significant in 2023. Jeff mentioned earlier the upstate New York and Vermont flooding event that did $2.2 billion worth of damage last year. Earth Visions tracks events like that before, during, and after, allowing you both to prepare for them, but then also historically go back and say, this property that's in my portfolio, was it affected by this event? How do I know whether or not maybe it has experienced flooding damage in its history? So we can see that in this event, this occurred in July of 2023 with rainfall amounts totaling from 3 to up to 9 inches that fell on saturated soils in a 48-hour period. And so with that event, of course, various disaster declarations were issued. FEMA issued a disaster declaration right away on the 14th of July, and we track all of those in our system. We're able to distinguish between areas where individual assistance is made available and just public assistance is available. Drilling into a particular area of impact, we can see here in the Burlington area, the areas in blue indicating where there was significant flooding impacts, where there was, the ground was saturated and water sat on the ground for an extended period of time. We're also, of course, picking up data from individual flood gauges. So we're able to look at, say, this particular gauge near Essex Junction, that the flood level peaked on July 12th at over 20 feet above the normal level, the water level. So we were into a major flood stage. And we use information like that to be able to say, okay, if you get up to 20 feet, we know exactly where the flooding is occurring and what areas are inundated by that event. Moving on to the flooding event that occurred in late September in New York City and Long Island, we can see that similarly, a huge amount of rain fell. Up to 8 inches of rain was reported, for example, at some of the local airports over a 24-hour period in that event. That caused an intersection like this one in Prospect Park in Brooklyn to look like this once that rain had stopped after 24 hours of continuous rainfall. And so we're tracking these kinds of events constantly, pulling in imagery as well as all of the sensor readings to be able to help you to know exactly what's going on at any time. And of course, another major event that happened last year was Hurricane Idalia. We're, of course, tracking this from when it originated off of the Yucatan Peninsula of Mexico. Looking at where it would go, what properties, customer properties would be impacted, letting them know in advance that they could expect impacts, not just that they were in the likely area, the so-called zone of uncertainty, but also what the impacts would be in terms of wind, in terms of precipitation, in terms of flash flood risk, and in terms of storm surge. Being able to say in this particular area there would be greater than 9 feet of storm surge expected when the storm made landfalls based on the intensity, the speed, and the direction of the storm. As the storm hits, we're able to indicate what's happening in real time, wave heights, wind speeds, areas where flooding is being reported, all of those kinds of things to be able to help people to know what's happening. And then afterwards, we're able to pick up imagery in the form of crowdsourced photography and aerial imagery to be able to look at particular areas of greatest impact and say, for example, in this case, that there was this house here in Perry, Florida, that had its roof blown over to this structure over here. So we're picking up all that information so that if you have properties in your portfolio that are in these affected areas, you can get a very early sense of how impacted they will be. We don't just monitor natural disasters, we also look at a variety of man-made events, whether those be structure fires or power outages. You know, we can pick up pretty much any event that can do property damage. Another piece of what we do is portfolio management, where we allow you to pull in information from your portfolios and then track that within our system to get those kinds of alerts, but also for other kinds of reports. So for example, you can pull in a portfolio and then search and view it based on category, whether that be, sub-pieces, who those clients are. You could also look at it in terms of, say, occupancy status, as we've provided for some single-family rental companies, being able to look at, is it as occupied, is it vacant? This could be, of course, something like loan status, or is there delinquency, or is it REO status? All those kinds of things can be tracked through our system. Also mentioned before, the ability to do risk assessment. We pull in the latest data available from FEMA in terms of flood risk, and you can look at each property in your portfolio, not just on the map, but also just a pull report as you load this data into your system, into our system. Get out reports for each property. Is it in an area of low, moderate, high flood risk? And also, is that changing? Is a new area suddenly been designated as high flood risk that wasn't before because of a reevaluation after flooding events, after changes to the topography and so forth? We can provide all of that information for you. We can, as I said, produce various kinds of reports on this. You can drill down to individual properties and look at them, get reference photography and information about them. Whatever information you want to provide can be shown here as well. Those can be linked to photographs, reference photography through Google Street View imagery. And you also have the ability to link up to some of the data we've aggregated through public records and so forth, to be able to look at any property and see information about the age of the property, the construction, the ownership, assessment, and so forth. Finally, we provide a lot of information related to operations in terms of field and fleet communications and management. One of the services we provide for that is Drive Tracker, which was really designed for the property inspection industry, which provides information on route optimization, real-time conditions, and fleet management. You can load up a list of properties that you want to visit, optimize, find the fastest, most efficient possible route, and then be able to find turn-by-turn directions, see impacts to your route based on road conditions and other conditions, whether or not there's maintenance or a bridge out that would affect your travels, and then also track your whole fleet using GPS technologies. So anyway, that's a quick view of what EarthVisions does, and we would like to turn this over now for some Q&A and see if there are any questions.
Gentlemen, this is Bill
chat.
again, Bill Kennedy. I have just one quick question for you. It's really a statement rather than a question, but Jeff, to what you were talking about earlier, avoid financing properties in a high risk area, high climate risk area. I guess what I'm trying to say is regulators will have to get on board with this, because we, the lending industry, the home financing industry has a redlining issue, right? You have to lend in certain communities where you're located. So have you run into that? Have you heard if the regulators are paying attention to what you're bringing up today?
That's a good question, and I think one we would like to look into before saying things that may be misleading. It's a really good point. I mean, you're required to lend in certain areas, and I don't know if you come in with data saying we wouldn't normally write a loan here because we're right in the middle of a flood zone. I don't know what the bank regulators would say about that.
Right.
It's kind of part of a bigger issue that the whole industry is waking up to the fact that sea levels are rising, and that these certain areas in the country are flooding way more and way more frequently than they used to. And I don't know if the federal government has particularly caught up to that, even though FEMA and NOAA and the National Weather Service are all federal agencies. It's sort of connecting the dots is the challenge, I think, here.
Right. I mean, if forecasts on 30 to 50 year sea level rise come to fruition, the reality is that there are some areas where there's currently housing stock and other kinds of buildings that will become uninhabitable because the sea levels will have risen too much. So that's something that all these industries and government are going to have to work on together to understand what to do about that. I don't know that there's a simple, easy solution, but it's definitely an issue that everybody's going to have to face and deal with.
Thank you,
It's
guys.
a really good question, though, that we will continue to delve into.
Anything else?
Okay, I think we'll turn it back to New York MBA for some closing. I think you guys had some more housekeeping to take care of. Why don't we do that?
Sure. Yeah, no, definitely. Thank you very much, Jeff and Craig. Just wonderful detail, a lot of great information that you shared here. So again, anyone that attended the session, please make sure you carry this forward. We ask you to talk to your folks in risk or loan servicing or the loss mitigation areas, especially, right? Let them know about these services and tools that are available through Earth Vision, and certainly reach out to Jeff directly for additional conversation or needs that you may have. But very, very much appreciated, Jeff and Craig, for the information today. To finish up here for the session, we just also want to remind all of our attendees here today of our upcoming advocacy conference. We're hosting that in Albany. It's coming up in a little less than 2 weeks here, Monday the 11th and Tuesday the 12th, in-person afternoon sessions on Monday the 11th. Then we have a networking event with multiple legislators that are coming into Albany and will be there available to network with. And then on Tuesday, we take the group of folks and everybody goes up to the Hill, visits different legislators in their offices and with their staffs and teams, to talk about a lot of these issues that are very important to us in the industry, bills that are currently moving forward that we both support and we also oppose as well. So a lot of good information comes out of that, the direct interaction with the legislators. It's really, really impactful in the voice that we have to carry forward a lot of the issues that we're dealing with in our industry. So I want to make sure everybody has the chance to do that. If you'd like, go to the website. Right on our homepage, you'll find the link to click into the web. You'll also register for the conference. They still have discounted room rates available as well. So we look forward to hopefully seeing more of you there. And again, to wrap up, a very, very great session today, Jeff and Craig. Thank you again on behalf of the New York Mortgage Bankers Association. And thank you for being members. And we look forward to doing more work with you here as we go forward. Okay.
Thank you, Joe. Thank you.
Yes, our pleasure. Thanks, everybody.